Hello, I'm Rosanna Lockwood and we're live from the heart of COP29 in Baku. This is Financial Inclusion in Climate Action, brought to you by Project Syndicate in partnership with Mastercard. Well, I'm sure you will have heard by now that this COP has been dubbed the Finance COP, with a focus on vast amounts of money being pledged to help the developing world mitigate against and adapt to climate challenges. This event will focus on how to get that money into people's hands. Over 1.4 billion people around the world do not have bank accounts, and with 80% of them in climate vulnerable countries, growing financial inclusion is a key part of empowering people to take climate action. Well, joining me to discuss this are a stellar list of contributors from across the worlds of development and the private sector. But of course, today, the most important contributor is you watching this. If you want to make your voice heard, please post using the hashtag #PSEvents. Now, on the sofa today, I'm pleased to say we're joined by Ellen Jakowski, who's Chief Sustainability Officer at Mastercard, who was this week named in Time Magazine's 100 Most Influential Climate Leaders. Congratulations, Ellen.
Thank you.
Also joined by Fadel Kaboub of Powershift Africa and President of the Global Institute for Sustainable Prosperity. Good to see you, Fadel. And joining us remotely as well from Washington, D.C. is Sophie Certain, the CEO of CGAP, which is a partnership of over 35 financial institutions created to further financial inclusion and relieve poverty. Thanks very much, all three of you, for joining us. Let's get this discussion underway, because there's so much to be talking about. And I think, Ellen, where we want to start is making it clear for our audience who are joining us what the link is between financial inclusion and climate change.
Sure. Well, first of all, thanks for having me for this discussion today. You mentioned in the intro the number of people, well over 1 million people who don't have bank accounts, right? And studies have shown that when you are financially included, you're much better able to handle, adapt, and be more resilient to the impacts of climate. So we've seen many use cases all around the world where this is the case. And the Mastercard Economics Institute actually just did a very interesting study where they were looking at the impacts of hurricanes and other extreme weather events, particularly in the US. And what that was showing is, about 9 days before the extreme weather event hits, up to about 16 days after that event, businesses are affected in that local region where the extreme weather event is happening. So that's almost a month where your business is impacted. For those businesses that were brick and mortar only, about 50% of their revenue was affected. So that's dramatic, right, over the span of a month. But if you were a brick and mortar company that also had an online presence, that reduced to about 20% of your revenue being impacted. Wow. So clear indicator that if you are digitally included, if you have an online presence as a business, financial inclusion can help you be much more resilient and be able to adapt.
Wow. I mean, we'll come back to go into some of those stats you've mentioned there and case studies in more detail, because I think so often in climate emergencies, people are obviously thinking about the lives lost and people's homes lost, but so rarely about business as well and how people's livelihoods can be lost. We'll come back to that, and I'll come back to you, Fadel, but I just want to get out to Sophie in Washington, D.C., because your members at CGAP range across an enormous list of geographies. Talk to us about some of the problems you see on the ground when it comes to climate and financial inclusion.
Well, climate and financial inclusion should be interlinked much more than they are. I think that's the biggest problem. So we do see, as Helen was mentioning, the fact that climate change has now become one of the key challenges that people around the world and small businesses face. We see, for instance, women working in India in the fields or in cities selling their produce on the street being unable to work because of extreme heat. We see small businesses being flooded and unable to function for days, as Helen mentioned, and so on and so forth. But we also see that financial inclusion is, in fact, the key enabler that people need for any climate action that they need, whether it's to build their resilience, to adapt, or to participate, in effect, in grassroots climate mitigation, climate green transition. And that is because you need access to funding, whether it is remittances, payments, savings, or credit and insurance, to get the funds that are needed to take any of these actions. And at the moment, as you started in your introduction, you still have about 1.4 billion people that don't have access to any financial services. But you have many more people who do not have access to other services than an account. An account is already an excellent starting point, of course, because you can start using accounts to get payments from friends, from families, from remittances, but also from governments. Social transfers can be very effective in the case of a climate shock for a very poor family. But of course, we would love to see a deeper penetration of different financial services to meet all these complex needs.
So many, like you said, so many different financial services required for people to feel stable and not vulnerable to all these climate catastrophes. Fidel, I'll come to you and ask from your experience, because not only are you an academic, you teach, but you also are part of various interesting institutes currently based in Kenya, and you've seen a lot of the world. Does a lot of this echo what you've seen in terms of financial inclusion and climate emergencies?
Absolutely, especially in the African continent, when you think about the number of people who are not just unbanked or underbanked, but the number of people who have no access to electricity. I mean, it's important to have the digital access to banking and everything, but if you don't have electricity, you can't even charge your phone. You can't even have access to information. For the millions of farmers on the African continent, for example, who have no access to information, the traditional method of anticipating weather changes and knowing how to interact with the environment when it comes to planting season and harvesting, all of that information today is no longer available via traditional methods. So you have to have access to meteorological information, which you can only get in rural areas via the internet on digital platforms. And if you don't have even electricity or network to have access to that, having the digital banking information to connect with your clients, your customers, the logistics that will get your product to the largest cities where your customers are, all of that, you're completely excluded and isolated. And then you become even more vulnerable to climate events financially and physically. So all of that ecosystem needs to be put in place in a coherent, comprehensive way at the same time. So we're talking about multiple components. That's why this COP and these climate negotiations about climate finance from an African perspective, we call it development finance, because you can't separate the decarbonization process from the economic development and transformation on the African continent and the rest of the global south.
That makes a lot of sense, because how is anybody supposed to develop or progress if, you know, they're constantly being held back by these types of circumstances happening to them and not having access to those digital solutions as well? We'll come back to the digital side, but before we move on to talk about some of the solutions, Eleanor, I was wondering if you could give us a bit more insight from what you see in your work about the impact specifically on SMEs.
Sure. Well, we just launched a study this week around trying to better understand, what do businesses need? What do small businesses need? When you think about the concept of, what's the role that small businesses play in our economy? About 90% of all businesses are small businesses. They are responsible for 70% of the employment of the world's population, so quite significant, and about 50% of the global GDP. So the role that they play is outsized. And of course, the impacts that they feel on climate change are also going to be outsized impacts compared to others, like, for example, large corporations that are better enabled to deal with the stressors and the impacts of climate. So this is an audience that definitely needs attention.
Sophie, you were nodding along there. Is that something that you've seen as well, that you've observed when you're thinking about the financial institutions you're partnering with? Is there a thought that goes into the services provided to SMEs?
Yeah, so we see a lot of innovations in terms of products that serve the climate needs, basically, of low-income people and SMEs, on the range from resilience building and adaptation all the way to enabling them to benefit from acquire green technologies. Some examples that we see, I'm going to start with resilience, is, for instance, new insurance product, obviously, that leverage technologies and data, as was mentioned before, but also, for instance, contingent credit lines that enable people to be pre-approved for a credit line in case of a shock, and that triggers on the basis of an index. So it is accessible much faster than a normal credit line. On the insurance side, I'll talk, for instance, about an extreme heat insurance that SIWA, the self-help group, self-association of women in India, has developed, that it is reaching women at scale with an income loss compensation when they can't work because of extreme heat. On the side of mitigation and participating in a clean, just transition, you see a lot of fintech activities. For instance, Coolbox is a solar refrigeration company in Nigeria, which is providing small shops with pay-as-you-go financing to purchase a solar refrigerator in areas where they would normally have bought a diesel generators because the grid remains unreliable. You also see a lot of fintechs and other companies, but especially fintechs, getting access to the carbon credit markets to defray the upfront cost of green technologies for small clients and small shops. For instance, in Kenya, Cocoa Networks has raised around 100 million from the sale of carbon credit, and they've used that to subsidize the cost of bioethanol cookstoves for individuals or small shops by up to 85%, as well as the cost of the fuel itself by 40%. So you see a lot of innovation, but the problem is that they need to scale. Some of them are starting to scale, but a lot of them need much more financing. And to expand in other markets, smaller markets, riskier markets, they also need blended finance. They need de-risking mechanism.
Blended finance is something, and carbon markets, that we're talking about just so much at this COP, and we'll come back to COP itself and what you're hoping to get out of it. But really interesting case studies from Sophie there, Fadel, about different technologies in African countries, which must be something you've seen. But I want to ask you specifically on the fintech side of it, the expansion of digital banking in Africa, because it's been extraordinary, the progress. In some cases, it's leapfrog traditional banking services in large parts of Africa. So talk to us about how transformational that has been.
I mean, access to banking services, and mobile money in particular in Kenya and the rest of the African continent has been way ahead of many developed countries to some extent in terms of penetration and access and having real impact on economic development. But it can only take you so far because you still have external constraints. So when it comes to economic activity in countries that are dependent on food imports, on energy imports, from the rest of the world, which is the case of the African continent, then any additional pressure on your food imports, energy imports, will cause pressure on your exchange rate, which weakens the value of your currency. And with the weaker currency, anything you import the next morning will be more expensive, especially when it's food and fuel that's affecting the most vulnerable people. So that creates macroeconomic conditions that are constraining your economic development. So yes, digital transformation domestically and mobile money can take you thus far, but it doesn't change the macro structural effects that require much bigger transformation beyond what individual companies or individuals can do. And this is where the role of government, regulatory framework, and long-term strategic visions, which is becoming more and more difficult when a country is in a debt trap, like Kenya, for example. 50% of export revenues go towards servicing the debt. So there's very little fiscal policy space left to do the smaller transformation and the bigger long-term transformation needed, whether it's in the agricultural sector, the energy, the digital sector. So the role of the state becomes much more constrained, and therefore there's more reliance on external funding, more reliance on external partners. And that's where a lot of the conversations need to happen about what is the role of external partners and producing the kind of transformation that is needed, rather than producing or reproducing the same structural traps.
That, I mean, not much can be done about exchange rate fluctuations in times of crisis, of course, but like you said there are other kind of pillars that you would hope would be there to support countries, developing countries, when these types of crises occur. And so if you talk to us a little bit about development banks and the role that they can play responsibly in ensuring that countries do feel supported in times of climate crisis without falling into these debt traps.
Thanks a lot. So first of all, I fully agree with what was said. Obviously, macroeconomic stability is fundamental and is the backbone on any development. I also want to link with what was said before, which is the digital connectivity and making sure that digital connectivity reaches the last mile is also essential, because all the solutions that we're talking about today are digital, and otherwise people will fall further behind. Now, I want to also come back to the role of mobile money and inclusive finance, because I think it is actually bigger than what we see and what we are exploiting today in providing a solution to the climate crisis. And that is because, first, if you realize in terms of number, mobile money reaches about 1.8 billion accounts today. So it's about basically half the population in terms of families. And it is transacting about $1.4 trillion, which is enormous. And most of these clients are unbanked, low-income people. So it's a massive inroad, if you want, into the hands of these people. In addition, if you take the whole inclusive finance sector as a whole, so not just mobile money, but also microfinance, digital banks that are inclusive insurance providers, fintechs, they mobilize already enough capital from public, private, and nonprofit sources to extend to generate lending at a rate of over $100 billion per year. So it's a massive opportunity, we believe, to channel climate funding in a more inclusive manner. They can be, in a way, a channel, an avenue to distribute climate funding. And you were asking about development banks, DFIs, for instance, multilateral institutions, etc. Of course, on the one hand, they have to continue helping maintaining macro stability, strengthening sectoral policies, increasing digital connectivity. But one of the other things that they could contribute is channeling part of the climate financing that they provide. They're some of the biggest actors in the world, through inclusive financial institutions to reach people at the grassroots in developing countries and provide support for a more locally led resilience building, adaptation, and green transition.
That is a theme that I think I've heard a lot through the interviews we've had on these sofas the last couple of days, is people saying, well, it's all very well and good, Ellen, raising all this money at events like COP or agreeing to, but actually when the funds are raised, it's very difficult to channel them to people, and they don't necessarily always end up outside the capital cities and the countries that they go to and in the hands of the people that need it. So this being called the Finance COP, what would you like to see happen from this event?
Sure. Well, Mastercard is here as a private sector voice that is intent on continuing to take action for climate and for the communities that we were talking about, right? For those that are unbanked, to make sure that we're doing everything we can to drive financial inclusion for those who need it most, to make sure that, I mentioned the study that we launched earlier this week, the three things that came out of that study in terms of what is needed most. It is data, access to capital, and wraparound services like training and that sort of thing. So as we continue to focus and understand what is needed, we're committed to taking action on that and delivering those types of services through our Center for Inclusive Growth and everything that we're doing to drive that financial inclusion, which will prepare communities to be able to better adapt to climate change.
Can you flesh that out a bit for us? So you've got the centres going on, you've got the studies coming out, but what is Mastercard actually doing sort of on the ground so that people can understand to help with financial inclusion in these places?
Sure. So our theory of kind of change around financial inclusion, it begins with access. So having access to all of these digital tools. Then it's usage, making sure that we don't just provide access, but then how do we make sure people are really using these tools? And this is on the pathway to financial health. That's kind of the ultimate goal, so that you're able to actually deal with any of the economic shocks that you're feeling, perhaps because of climate or otherwise. And of course, the big idea is that you're able to generate wealth, right? Once you're digitally included, once you have all of the access to these financial tools, that is kind of the holy grail.
Fadel, you're nodding along to some of that, so let me ask you whether that formula, you think, is a formula for success in some of the countries that you've observed that are most vulnerable to climate crisis.
Absolutely. I mean, this is a very important component of the micro aspect of the sustainable prosperity that we want to put in place in the African continent in particular. But there's also the macro ecosystem, which is what this COP is about. From an African perspective, we're pushing for climate finance to be considered development finance. And we're pushing for moving from the billions to trillions in terms of commitment to climate action. And most importantly, the quality of those trillions matters. In other words, we want climate finance and development finance to be channeled in the form of grants, not loans and further economic debt entrapment. Number two, in the form of cancellation of all climate-related debts that have further driven countries into debt and restricted their fiscal policy space for action. And number three, transfer of what we call life-saving technologies to allow us on the African continent to use all the critical minerals we have to manufacture and deploy the building blocks of the climate adaptation, the climate action infrastructure, starting with renewable energy infrastructure to deliver to the 600 million people who don't have any access to electricity to speak with, which is what they need as a prerequisite so that they can actually be connected and be able to access financial services and digital services, to manufacture and deploy clean cooking infrastructure for the 950 million people, mostly women and children, inhaling toxic fumes on a daily basis because of lack of clean cooking infrastructure, and to manufacture and deploy the clean transportation infrastructure to build the logistical infrastructure to connect cities, to connect our economies. This is the minimum, and that's the kind of green industrialization that will completely transform the continent. And all of these happen to be climate solutions, because this is all climate adaptation, but they're also economic transformation that will create the ecosystem for businesses and individuals not only to survive, but to thrive and to really completely reposition the African continent away from the bottom of the economic and geopolitical hierarchy. And that is the opportunity that's within reach.
And I think this conversation is serving very well to point out how those two can work in parallel together, that sort of economic progress and the climate, the green transition progress, and also be interlinked as well, and what one feeds into the other. And Sophie, just on a micro level, when it comes to financial inclusion, and clearly it's a large part of your headspace day to day, even though you're working with these institutions, how reassured were you when you heard that this was going to become the finance COP in Baku? Did you think that financial inclusion for even just the individuals in these countries would be thought about?
So it's a very difficult question to answer. Let's put it this way. I think we are in a journey. And I think this has become more and more the focus of the COP. I think that once the NCQG will be reached, then it will be squarely time to focus on how the money will be dispersed and to whom. And that will be, in a way, one of the key criteria to ensure that climate finance is of quality, because it can't be of quality if it's not inclusive, because it needs to be inclusive to galvanize more grassroots climate action enabled through global climate action, and of course protect those who are affected the most. So for me, the fact that this COP is a climate COP is extremely important. It's the beginning of a journey, but it's a journey that hasn't finished. We need to put much more emphasis going forward, and Berlin might be the place where we continue that focus on making sure that climate finance becomes more inclusive and reaches those who need it the most and those who can participate in climate action together with all of us.
Belém in Brazil, of course, being the site for COP 2030, which we'll be starting to think about and look ahead to. We've sort of identified some of the hoped for solutions, some of the things that are already being done, things that you'd like to see at scale happening to encourage more financial inclusion in these places. But let's think about some of the challenges that might still occur in order to implement those. And Fedel, you already mentioned, difficult internet access in rural areas and things like that. When you think about mobile banking and digital banking services, that's only possible with a stable Wi-Fi connection or indeed a cell phone tower nearby. Talk to us about the actual on-the-ground reality for that.
Well, it's not only the access to the network, it's access to electricity.
Yeah, right.
To charge phones to begin with, to operate those towers and so on. And that's still a major challenge on the African continent. As I mentioned earlier, 600 million people already don't have any access to electricity to begin with. So that's a huge, big push that needs to happen. And most of it is in rural areas. But to bring those investments into place requires fiscal policy space at the national level, which doesn't exist, or international commitment to real transformation on the African continent. That's why we focus on, because we have a very simple scientific formula that should be the starting point of the conversation, which is industrialized countries have exceeded their carbon budget by far. So they have a climate debt. Africa as a continent emits less than 4% of global emissions. We're talking cumulative emissions. That's the equivalent of Spain alone. So there is a moral, legal, financial responsibility for the global north to help with the transfer of financial resources, not as in loans, but as in actual grants, to actually allow for that big push to happen, to allow the African continent, which has the largest renewable energy potential on the planet. IRENA last year, in their report, the International Renewable Energy Agency, they said that Africa can produce 1,000 times its anticipated energy needs from renewables by 2040 and completely replace all of its fossil fuel exports. That's technically within reach. Yes, yet the African continent attracts less than 2% of financial investments that go towards renewables, and we are being denied access to the manufacturing technology to use critical minerals to actually deploy the infrastructure needed. So all of that is at the core of COP negotiations, because this is a real win-win potential that we're not reaching for some reason.
I can just imagine how frustrating that must be dealing with that on a daily basis, not only for those working in this industry, but those living and experiencing it daily, that tangled web of barriers, basically, to this huge opportunity there for many countries on the African continent to absolutely prosper and actually become leaders in what's being called the just transition. I mean, Ellen, when you listen to that, what type of role do you think private sector companies can play in helping to overcome some of those challenges?
Sure. Well, again, through our Center for Inclusive Growth, which has been around for well over a decade, we've created a lot of tools and capabilities, products and services that are ripe to go into communities to help them access and be included in the financial economy from a digital point of view. So I think we're well positioned. We've got a lot of strong partners. We continue to elevate those every day. For example, in Africa, our Community Pass program has been quite successful. In particular, there's a sub-segment of that called Farm Pass, where we're working with local farmers on the African continent to move them into the digital economy. And what we found is when we help them get access to that, a lot of the middlemen who are part of their ecosystem tend to fall out. They're then able to be more profitable through the processes that they're set up to succeed with by being financially included. If they're more profitable, and you have the effects of climate, for example, drought, where water prices and access becomes more expensive to get, or seeds become more expensive for your planting season. If you're able to save more money through this process, you're better able to deal with those climate impacts. So I think we've seen a lot of case studies of how to be successful, and it's through deep partnerships and finding the right places in the community to start bringing these toolkits so that people can be digitally included.
Interesting. I mean, Sophie, that makes me want to come to you and ask how important it is that, not only private sector companies, but basically all types of financial institutions can get directly to the people and sometimes push out some of the middlemen that might be in the way, that it might be just conflating or confusing the process or reaping profit where they shouldn't.
Inclusive financial services providers typically reach the hands of small people immediately, of low-income people immediately, and they don't need middlemen in between. And so that's the beauty of it. I think we're getting to a set of solutions that are increasingly leveraging data and requiring less of a middleman intermediation, because everything is digital and therefore doesn't need this face-to-face interaction. At the same time, we do see that the role of agents remains very important in rural areas and where connectivity is lagging behind and where you need to make a connection between the digital world that financial services are provided with and the cash economy that still prevail in some rural areas. These agents can be very positive too, so it's not always negative. They can build trust in the system. They can also improve digital or financial literacy for first-time users, etc. But of course, they need to be well trained. We need licensing services for them, of course, with a lot of proportionality, because we do want them to be active at the last mile. But fundamentally, if you increase digital connectivity to the last mile and you support innovation by new players, whether they're digital financial services providers of all sizes or fintechs, and you leverage data a lot of poor people today are digitally included and have started generating digital data trails that increasingly can be leveraged to provide them with a lot of different financial services, not just accounts, but really even credit, because you can do credit scoring with the digital data trails. So that is really pushing the frontier of what is possible to offer, even in remote areas. And so I think we're going to see an increase in the supply of financial services that are better and more tailored to the needs of everyone on the planet. And that will be made possible when digital public ecosystems are in place, including data sharing solutions. But maybe one thing that we haven't talked about, and that is very important to include when building those ecosystems at country level, is a focus on women. Because women are most affected by climate change. They're less equipped typically than men in terms of access to financial services. And yet they can be agents of change for climate change in their household, but also in their communities. So all these infrastructure, all these products and services that are being developed to reach everyone with climate solutions need to be gender intentional. We really need to focus on women and make sure they're not excluded from these solutions.
It's a really important point to highlight, so especially with lack of access to banking services for many women in these most vulnerable and developing countries. Ellen, like how much of what women are facing is forming part of your offering?
Sure. Well, we certainly have a strong focus on women-led businesses as well through our Strive program, which focuses on small businesses across the world and making sure that they're financially included. So as Sophie said, it is a key demographic, right? They're most affected, but then also often when you give them the tool set, they're the ones that are exponential in terms of bringing those benefits to a much wider group within their community. So women can be very powerful in terms of the solution.
Fahd, another very big issue that we haven't yet touched on in this conversation, which is part of the endless cycle of lack of progress for some countries, is the link between conflict, war, and becoming or being a fragile state and not being able to progress out of that state. And there's so many conflicts happening at the moment worldwide. When you think about financial inclusion and the role that it plays into that, I mean, where do you begin to help people in those situations?
Yeah, we know from previous conflicts that refugees, people who get a chance to leave a conflict area first, are typically people who have access to financial resources, financial services, have wealth. They tend to leave earlier and be safer. People who are stuck in conflict zones are people who have no transportation, logistics, financial resources, or access to digital information that will give them the signals to leave in a safe way. The other important thing linked to climate change and conflict and refugees in this case is a recent study by the World Bank, which is actually a very conservative estimate about the impact of climate change. They're estimating that by 2050, which is the day after tomorrow on the climate clock, there'll be 216 million people displaced internally because of climate events, more than 100 million on the African continent. And we know that when we have internal displacement of this scale, it puts additional pressure on resources, whether it's food or housing or jobs or everything else. And that tends to exacerbate existing tensions, lead to conflict, and as a result leads to people moving beyond borders. And when you see the flow of migrants that's already on the move from the African continent towards North Africa and towards Europe, we know that this is the beginning of a very dangerous pattern, which means that our efforts to increase funding for development and climate adaptation to mitigate the risks of millions of people having to be, displaced from their own communities is more important than ever. And that means starting at the micro level, at the local community, and making sure that you have an ecosystem of surviving and thriving, which means climate adaptation, which means the entire ecosystem, housing, energy, food, transportation, financial services, digital services, so that people have the resilience to withstand the impact of climate change and avoid conflict in the first place.
It's a really complex picture, and also reminds us just what so many people in the world are going through right now in so many of these countries. Sophie, in terms of what Fadel was saying there, do you think in the work that you've done that you've seen it is possible to get to a point where you could give people that sense of financial inclusion and stability that they may not need to migrate if they weren't forced to for their own safety and humanity?
I want to make 2 points here. I think that first of all, we can use some of the humanitarian transfers that are going to these countries to create the rails that will ultimately be the backbones for a digital economy and for more stable financial inclusion. This is something that we're testing with several of our donors, including WFP, in several countries, including in South Sudan, for instance, where we're working towards that. The second thing I want to say is that as soon as this is done, financial inclusion can really be a source of, entrepreneurship, self-employment, job creation. And this is something that is well evidenced. For individuals that work in a self-employed basis, financial inclusion is absolutely necessary to provide you with the resources you need to invest in your small business, grow your small business, or just run your small business. It is also very much associated with women economic empowerment, as we discussed before, because it allows women more autonomy, more decision making, and a bigger role in the household. So fundamentally, yes, it is very important that even in FCVs, even in fragile countries, we think about financial inclusion as a tool to empower people, to grow them out of poverty, and that we leverage humanitarian cash transfers to build the rails for that to happen.
Ellen, is self-employment considered enough when it comes to thinking about empowerment of individuals in developing countries?
Well, I think it's really about the support system included in all of that, right? So again, the wraparound services that people need. It's not just a job, right? It's all of the other things, the training, especially as you think about that runway, that pathway from getting access to the tools that you need to actually being able to use it and knowing how to use it, all the way up to the trajectory of financial health. So I think it is a journey, as was mentioned earlier, and we're making good progress. We know how to do this. We just need to continue to scale.
Continuing to scale is one of the great big puzzle pieces of COP29 generally, Fadel, when you think about what is hoped for from these types of meetings. And we've talked about so much as part of this conversation. We've talked about access to financial services. We've talked about conflict, women's empowerment, self-employment, and basically allowing developing countries to keep developing. A lot of that ties into what is being discussed here, but all through a climate prism. How do you think that countries and private sectors can work across their different sort of siloed places to try and reach points of agreement and help countries prosper like this? Possible for African countries but haven't yet been reached. Do you maintain hopeful that COP can actually deliver solutions?
Well, one of the things I always try to push multilateral negotiations and events like this to consider are the big picture. Because we have the convening power, not just the financial firepower, but the convening power to have conversations about the leapfrogging opportunities. Consider the African continent. We're the size of China, which means we have economies of scale for real industrial policies. We have all the critical minerals. We have the youngest labor force on the planet. What's lacking is access to the manufacturing technology to manufacture and deploy at scale the infrastructure for renewable energy production, for all the digital infrastructure that we need, for the clean cooking infrastructure, transportation. All of this is possible for a massive revolution, green industrial revolution on the continent. Yes, yet we're still looking at micro projects at the micro level because we're not having these large-scale conversations about the potential transformation. Consider just taking the entire value chain of producing solar panels, which is available everywhere in the global north, in China. Why not design a block of countries on the African continent that have all the complementarity of resources and capability and say, we're going to replicate these 50, 60 factories of the entire value chain and start manufacturing at scale. My own country, Tunisia, we consume 6 gigawatt of electricity. China installs 6 gigawatt worth of renewable energy infrastructure in 6 weeks. Now, imagine the scale of implementation if we actually have the manufacturing capability on the African continent. That's the kind of conversation that we're not having yet at COP or in major convenings by the World Bank, by the African Development Bank. We're still talking about importing solar panels, incentivizing businesses and consumers to decarbonize, which is helpful. It's moving us in the right direction, but it's not the leapfrogging reality that is within reach, that is actually possible.
Do you still maintain optimism that that can be achieved?
Optimism, absolutely. This is why we're working. This is why we're here. Otherwise, we would say, well, this is the 29th edition of failed negotiations to actually get us to the transformation that we need. If we don't have optimism and if we don't inform, empower, mobilize, and organize to push for transformation, then we should just give up.
Sophie, how much optimism do you have at the moment?
I am optimistic. I think what we need is much more capital going to support innovation. So, for instance, to continue on the ideas that Fadel was describing, you have a lot of green technologies that are today actually more profitable than their dirty equivalent, and they can generate very significant co-benefits for their users in terms of productivity gains, health benefits. So I'm talking about things like, exactly as Fadel was describing, solar solutions, bioethanol cook stove, electric rickshaws, etc. So these solutions exist, and they are profitable in many markets already. So we need more impact investment capital, more investment capital in general to come to scale them. But then we also need more blended finance solutions to expand them into riskier market. What is still a problem is the affordability of some of these solutions for low-income families and small businesses in Africa or on other continents. But for that, there are also solutions. Of course, some could be very traditional, like subsidies, but we could also think about using the carbon credit markets more, since an agreement has also been reached, to defray the initial cost of these solutions. So I do believe that in the journey to the next COP, we have to start really focusing on this intersection, as Fadel was saying, between development and finance and climate, and make sure that more is channeled to enable these solutions to be accessible everywhere and to be scaled everywhere.
Ellen, are you...
So yes, I'm optimistic.
Well, that's good to hear, Sophie. We do like that. And Ellen, on that note of optimism, do you see enough innovation out there that reassures you that there is still optimism for this type of development?
Right. Well, I think, as we've heard from my co-panelists here, the solutions do exist, right? The technology is there. It really is about implementing it, giving access to the right communities, bringing those capabilities to the locations that need them most. So, you know, the equation is there. We know how to do this. We just have to continue on with the action and implementing it and finding the financing to make it work.
Ellen, Fadel, Sophie, thank you, all three of you, for a very interesting conversation there on the link between financial inclusion and climate change. And thank you all for joining us. Unfortunately, that's all we've got time for now, but it's been an absolute pleasure hosting this virtual conversation in partnership with Mastercard. And if you want to watch our previous sessions on the energy transition, it is now available on Project Syndicate's YouTube channel. Thank you very much. Goodbye.